from the heart of where innovation, money, and power collide. In Silicon Valley and beyond, this is Bloomberg Technology with Emily Chang.
I'm Emily Chang in San Francisco, and this is Bloomberg Technology. Coming up in the next hour, disappointing results from Netflix and Snap. Will the slew of big tech companies about to report be the same? We'll look ahead to Apple, Google, and Meta. Plus, in less than a week, the state of Florida has stripped Disney of its special privileges in the state. What it all means for the supposed happiest place on Earth. And how AI could reshape digital ads. I'll talk to the co-founder of Mutiny as it works to make advertising more profitable for businesses, more personalized for you. We'll get to all of that in a moment, but first let's get a look at the markets and the end of a painful week for tech. Bloomberg's Ed Ludlow here with all the movers. Ed, take it away.
Yeah, we end Friday pretty firmly in the red. The NASDAQ 100, a really tech-heavy index of U.S. equities, down 2.7%, biggest drop since March 7th. There's some anxiety out there about earnings, right? You were talking about Netflix, Snap earlier in the week. We have anxiety going into a crucial week for the mega caps next week. But we're also looking at the Fed speak, right? And the outlook and pace of hikes and how aggressive those will be. It's interesting, yields a little softer Friday. The yield on the benchmark US 10-year, 2.9%. And Bitcoin kind of caught up in this kind of overall risk-off sentiment that we see in below $40,000 per token. Coming in by Bloomberg Terminal, Emily Chang, host of Bloomberg Technology. Embrace yourself, because the NASDAQ 100 is in its lowest level in 6 weeks. But it gets worse. In the month of April, we're tracking for our worst month since 2008. We're now talking about performance in equity markets that looks like it did in the financial crisis. Going into a week where the stakes are so high, and you do have names like Apple and Amazon all reporting earnings in that same 3-day period, it sets us up for some big questions about the fundamental outlook for the rest of the year. Questions around supply chain, questions around the consumer, questions around inflation and growing input costs for corporate America. It's a lot to take on board. Some interesting movers. Only 3 stocks on the NASDAQ 100 actually rose on Friday. Electronic Arts, one of those, up almost 3.5%. No real discernible piece of news. And Tesla was one of the bright spots of the week. Really impressive earnings, top line growth, bottom line growth. Basically saying supply chain, no problem. And it held on right until the end of Friday's session, but ultimately dropped 0.4%. And you see what I'm talking about here, Em. Ahead of earnings next week, big drops. Google now at its lowest level, Alphabet, I should say, the Google parent, since June of last year.
All right, we will brace ourselves for next week. Ed, thank you. Well, another down day for Netflix as investors continue to digest the streaming giant's first subscriber loss in a decade and question the future of streaming long term. This after the plug was pulled on CNN+ less than a month after launch. Is this the peak, and is a massive reset in streaming underway? To talk about all this and more, we're joined by Seema Shah of SimilarWeb. Seema, let's start with Netflix here. The focus right now is on signups, cancellations, password sharings, but what about ads? Could that really be the future, the solution for Netflix, or is it something else?
I think it possibly can. Maybe they'll be able to get another group of subscribers who don't want to pay the full amount for the non-ad version. But I think they have a couple of initiatives. They really want to work on managing the password sharing, and they really want to work, hopefully on creating this ad-based platform. But I think the bulk of this is because it's in the Western markets where they're most penetrated, and at the same time they're trying to develop content and grow in the international market. So, which is a different economic model in some cases because they have to invest in the location and maybe have lower pricing. So I think the ad model is something that could potentially help them, but I think the bigger fear is that what happened, are we just cycling the pull forward from the pandemic, or is it that there's fatigue for streaming, right? It might be a little bit of both, plus we have competitors coming into the space that are pressuring Netflix on the margin.
And I wonder if we're going to see a rethink of how much money companies are pouring in to streaming services. We just saw with CNN+, pretty brutal, shutting it down less than a month after launch. You actually have some data about how much traction CNN+ actually got in its first few weeks. What did you see?
So initially, when it formally launched, we saw a huge surge in visits that was actually greater than Fox, which was amazing just given how long Fox has been around. But subsequently in week 2, we saw this traffic decelerate by 31% and then again by 56% in week 3. So it seems that, part of that initial surge may have been due to people being curious about the service, wanting to try it out and just see, what it was and how different it might be from the free news services available. The other thing to consider is that there is a management change. This initiative was started, I believe, with Jeff Zucker, and the new management team might be, thinking about the way they're going to use their resources and if it's worth to, invest in this type of content given the competition that they're facing right now and general streaming environment.
Is it something that should have been given more time, or after seeing a plummet like that, just a couple of weeks later, is that just a sign of doom?
I don't know if it's a sign of doom, but I think when you're thinking about these streaming or these other kind of media platforms, at the end of the day, it's going to be all about content. And so if you're seeing, content not being as well received as you might have anticipated, you might get a better return by shifting, that investment into assets that will give you a bigger return, either different type of content or so that's kind of the way that I view it. It's a very competitive space. There's a lot of news that's free out there. And so, it makes sense if you think about how they're looking at how they want to use their capital, right? Where are they going to get the greatest return? And maybe other numbers that we can't see show that perhaps, they might get a greater return investing in another project.
So looking ahead to big tech earnings, we saw Snap struggle, Snap saying that advertisers started pulling out at the beginning of Russia's invasion of Ukraine. How does that bode for Meta? How does that bode for Google? And also we've got Apple coming up next week as well, and Amazon, which also has a huge ad business.
Yes, so I think in advertising in general, there's a couple of things that are influencing the business. Okay, so during the pandemic, it was sort of a perfect storm for digital advertising and marketing. So now what we're seeing as we're here in April 2022, you're anniversarying or cycling the stimulus, right? So that has a negative impact on e-commerce, which is obviously then related to advertising. If e-commerce is slowing down, then those retailers or companies are less likely to advertise. The other thing is also, just inflation. So when they're seeing at the same time the demand side is slowing down, they might also be seeing an increase in their costs. So a way to manage their profitability through this period might also be to pull back in their marketing spend. And I think the last thing is also, depending on how big your business is in Eastern Europe, the conflict in Ukraine and Russia does have somewhat of an impact, certainly in those markets, but it might also have sort of an additional impact in the adjacent markets as well.
All right, well, we will be across all of these big tech results coming up next week. Seema Shah of SimilarWeb. Seema, thank you for joining us. Coming up, it is now official. Florida's Governor Ron DeSantis has signed the bill stripping Disney of its special district status in the state. What it all means next. This is Bloomberg. The culture wars that have so divided the U.S. have now come for the most magical place on earth. Florida Republican Governor Ron DeSantis has now signed a bill that strips the Walt Disney Company of its unique tax districts. The special status essentially makes Disney its own city, avoiding having to deal with the red tape whenever it wants to build or do something new at the parks. The other concern with the bill, what happens to all that tax revenue Disney brings into the state. Last year alone, it was $780 million. And remember, this all started when Disney criticized a Florida law that limits teaching in schools about gender identity and sexual orientation. To help break it all down, I'm joined by Bloomberg's Nathan Crooks, who covers Florida for us, joining us from Miami, and Chris Palmieri, who covers all things Disney. Nathan, I want to start with you because it's shocking just how quickly this bill was passed. I believe bills were introduced the same day, Tuesday, that the governor asked them to look into this?
Yes, this all happened extremely fast. Tuesday, by surprise, Governor DeSantis asked the legislator to look into this issue. That same day, bills were introduced in a special session of Congress. The Senate passed it on Wednesday, the House passed it on Thursday, and it was just signed today. So this has happened at whirlwind speed that I don't think we've ever seen before in Florida.
So, Chris, what exactly does this mean for Disney, and how is Disney reacting to this so far?
What it means is not entirely clear, because it could be that this district still exists in some form going forward. The legislature could decide to kind of renew it in a different form next year. And so in that case, the impact may be minimal. Or the services may get put on, sewer and fire and all these things that Disney had been sort of paying for itself could go on to the county of Orange, and in that case, there would be disruption, sure, but probably nothing catastrophic. The company's been very quiet about this whole subject, not issuing any public statement whatsoever, which is unusual for them.
Nathan, what are the actual tax implications? If Governor DeSantis is saying Disney is going to pay more taxes, but there are concerns that some of the debts might fall back on taxpayers, can you unwind that for us?
I don't think anyone knows too many specifics yet, but there are a lot of questions. Bondholders want to know who's going to be responsible for paying back a lot of the debt. Property owners want to know if their taxes are going to increase. So this is a huge district. It involves a lot of municipal services. The district had also paid for, I think, the local sheriff in Orange County. So there are so many issues that need to be worked out. And of course, it all comes down to who's going to pay for what. So there are more questions right now that a lot of different people are going to be paying attention to this going forward.
Chris, obviously Disney has been in Florida for decades. I mean, could it come to them leaving the state, moving the parks out of the state?
Can't see that happening. Such a big business. I mean, 4 theme parks, 29,000 hotel rooms. A huge part of their profits globally come from Florida. No, I don't see that happening. But Disney's got to figure out some way to mitigate this war it's got going on with Ron DeSantis. I think they learned last month when they first spoke up about the schools bill, there's almost nothing they can say without angering, one side or the other, which is why they've been so quiet recently. But they've really got to work to get this past them so they can, continue to enjoy the money they've been making in Florida.
And on top of this, it's no secret, Governor DeSantis, probably wants to run for president in a couple of years. Nathan, could we see him taking, similar actions against other businesses?
Everyone is going to be watching that. This is all happening in a context where in Florida, we've seen a number of what they call culture war issues. There were new abortion restrictions. There was the bill on parental education rights in schools. We had this kind of confrontation with Disney. So these are issues that have been very popular with the DeSantis base voters, both in Florida and in the rest of the country. So this is definitely generating a lot of attention, and people are watching DeSantis both in Florida, but from a national perspective as well.
Now, Chris, of course, Bob Chapek, the CEO of Disney, initially said Disney wasn't going to push back on this law surrounding instruction about sexual orientation and gender identity in schools. Then there was huge pushback from employees across the company. Chapek did a 180, came out against this law. How is he faring internally at this point? He said he was going to go on a listening tour. He apologized. And now, of course, back in Florida, it's continuing to explode on the other end.
He's faring as well internally as he is externally, which is not great. I mean, he's in a really difficult position. No matter what the company says, half the nation is going to be mad at it. He's tried to, at this point, choose the course that he thinks is best for his employees. Many of his workers support, these issues on gay rights and that. And so he's chosen that course. But this will sort of continually put him in the crosshairs of conservatives who want to make this a big issue, not just this year, but for a long time.
Meantime, Disney earnings are also coming up, and the last report was also not great. And on the heels of what we saw from Netflix, the first subscriber loss in a decade, what are you expecting from Disney, Chris?
I mean, that'll be the ultimate judge of how well-liked Chapek is what he delivers financially to investors. Right now, we're not anticipating any huge surprises in terms of, subscriber declines for Disney Plus like Netflix saw. All indications are that theme parks are doing quite well, including in Florida. People are still going, long lines everywhere. So they could still have another strong quarter.
Nathan, what's next? How do you expect this to ultimately play out?
We're going to have a lot to keep attention on for the next year. This measure that was signed today by DeSantis, it still gives the officials over a year to figure out what they're going to do. And as was mentioned before, it's possible that an agreement could be reached, but Disney's going to have to maneuver a very tricky situation. It's not just what Disney's going to do, though. A lot of people, I think, in Florida are really paying close attention to this. I've had friends in Orlando write me worried that their taxes are going to go up. So this is going to affect a lot of different people, and it has a political nature to it as well. And we saw how fast this all came up. It could all change maybe just as fast. So it's something we're all going to be watching.
All right, Bloomberg's Nathan Crooks and Chris Palmieri, thank you both for your insights there. We'll continue to follow this story. Coming up, we're going to stick with Disney, but this time spend some time with WALL-E, the cute trash-clearing robot from Pixar. How that beloved character has best predicted the future. That is next. This is Bloomberg. Take yourself back to 2008 when the world was first introduced to WALL-E, that cute trash-clearing robot from Pixar. Fast forward now more than a decade, and it seems that life, or tech, is certainly imitating art. Bloomberg's Alex Webb talked to director Andrew Stanton.
Science fiction has been trying to predict the future since ancient Greece, but there's one film I've always thought seems to have accurately predicted an uncanny amount about humanity's direction of travel. I'm not talking about 2001: A Space Odyssey, Blade Runner, or even Minority Report. It's the animated story of a little trash-clearing robot, WALL-E.
I usually enjoy being right, but not in this instance. I didn't want to be right on so many things on this movie.
That's Andrew Stanton, the writer and director of WALL-E. On the surface, it's a tale of two robots falling in love on a post-apocalyptic Earth. But scratch a little deeper, and there's a fable about the consequences of consumption and technology addiction.
The funny thing we found out was, where do you think technology would go and why? And what ended up being our way to guess that was what would seduce you. Because we were watching it happen with the phone, and we were watching it happen with these electric scooters. It's like fast food. It's bad for you, but it's just seductively too tasty, and you cave. And so we thought, well, technology tends to win out when it hits that part of you. It's the part of you that likes, yeah, I know this probably isn't great for my eyesight to be staring at the screen all day, but I just need to click one more headline. So it's seduction that ended up being the gateway into things sticking into the culture.
WALL-E depicts a future where Earth has become inhospitable to life. The extreme weather events it portrays are already happening with more frequency. The Intergovernmental Panel on Climate Change determined in a recent report that hot temperatures that used to happen just once a decade now happen almost every 3 years, while droughts are almost twice as common. The film was released just a year after the first iPhone and correctly anticipates our burgeoning tech addictions. The human characters live a sedentary existence on a spaceship, floating around on hoverbeds and interacting solely via video calls. US adults now spend on average more than 11 hours a day in front of a screen. In 2008, when WALL-E was released, 34% of US adults were considered obese. It's now 42% and accelerating. And what are they eating? The spacebound humans in WALL-E eat meals from a cup. In recent years, we've seen the rise of firms like Huel and Soylent, makers of meal smoothies. The meal replacement market was worth $4.5 billion in 2008. It's now an almost $12 billion market. Then there are the satellites. The rocket ship in the film has to break through a crust of them to escape Earth's orbit. When the film was released, there were just a few hundred satellites circling the Earth. Now there are almost 8,000 and plans to add tens of thousands more.
Payload deploy confirmed.
Astronomers are already complaining about their declining ability to see the night sky. And the company that takes the humans into space is, of course, also a retailer called By and Large that appears to be something of a monopoly. It sounds more than a little bit like Amazon, the e-commerce giant whose sales have jumped from $19 billion in 2008 to a projected $541 billion this year. It hoovers up about 40% of US e-commerce sales. And Amazon founder Jeff Bezos also has a space exploration company called Blue Origin. Even in 2004, when he started working on WALL-E, Amazon was the inspiration for Stanton.
We were very early adopters in our household, and we were getting boxes, sometimes daily. And again, that's the norm now. But at the time, I thought, where is all this trash going?
Pixar's location on the doorstep of Silicon Valley may have helped it glean insights into the tech world, but the team had another major advantage when it came to predicting the future. Their boss was Steve Jobs.
He was with us for 10 years, for half a week, every week.
And that meant
we saw the iPhone before other people did. And I remember picking it up and using it, thinking it was magic like everybody else did. But I was also going, why is this feeling so familiar? And I realized, oh, this is what it's like when I used to smoke. I used to smoke to just fill the time. Like if I was standing waiting on a corner for a bus, you weren't feeling awkward, and if you just lit a cigarette and just sort of kept it going. And I thought, oh, there's some addictive quality to this, that just to occupy my time that is very, very, very instinctual. And so, again, it wasn't a huge leap for me to go, I could see this very quickly becoming a crutch.
Of course, there's plenty in WALL-E that hasn't yet come to pass. We are, after all, still living on Earth, and it's far more likely that climate change sends much of the world into poverty than into space. But life has an uncanny and perhaps intentional way of imitating art. The ship in WALL-E is called the Axiom. Elon Musk's SpaceX recently took tourists to the International Space Station. The name of the rocket?
Godspeed, Axiom 1.
Bloomberg's Alex Webb reporting there. And remember, of course, today is Earth Day. Coming up, she's using AI to change the digital ad space. Find out how. Co-founder and CEO of Mutiny joins us next. This is Bloomberg. Welcome back to Bloomberg Technology. I'm Emily Chang in San Francisco. Monster week of earnings coming up across big tech. Bloomberg's Ed Ludlow back with all the details. Ed, what are we looking for? Yeah, look, if the equity markets are anything to go by, we go into this monster week, as you say, with a lot of anxiety. Third straight week of declines across US equity markets. And in the context of big tech, it's not been great, right? You look at Apple, Microsoft, Alphabet, parent company of Google, significant declines, third straight week of declines. So let's take a look at what's on deck for next week. These are the earnings that we're watching. And it's the mega caps, right? Look at Tuesday. You've got Microsoft, Alphabet, the parent company of Google, Meta, the parent company of Facebook on April 27th. And then we have Apple and Amazon on the same day, April 28th. And slitted in there, you've got the chip makers, Qualcomm on April 27th, Intel April 28th. And of course, we're still thinking about how are people looking at gaming right now? Activision Blizzard to kick off the week. The equity story has not been a good one in 2022 for mega cap tech stocks, right? We started the year with valuations at near record highs. We have a lot of anxiety about the pace of rate hikes from the Federal Reserve. That blue line on your screen is Meta, the parent company of Facebook. You think about the market reaction we saw to Snap's earnings, for example, some evidence of pullback from advertisers around the conflict and war in Ukraine. What does that mean for Meta? The orange line you see up the top, S&P 500, still down 9% year to date, but we're trailing in a number of these mega cap tech stocks. What are they going to have to do around earnings? What confidence are they going to have to display around the supply chain to help us out with this? But this is where we stand year to date, right? S&P 500 down 10%, NASDAQ 100, tech-heavy index down 18%.
NYSE FANG Plus Index, which in there you've got sprinkled the US listed shares of Chinese tech companies alongside the mega caps, alongside Tesla, down more than 26%. Really big week next week. I'm here for it.
A lot of red there, Ed. We will be busy. Thank you. Well, with valuations as high as they are, more companies are starting to rethink their ad dollars. That's in the private markets and some in the public markets. The reality is, though, most retailers end up losing money on advertising, especially online advertising. This is a problem my next guest is trying to solve with Mutiny. This is a no-code platform that leverages AI to help convert marketing spend into revenue, and they're doing it for some of the fastest growing companies. Joining me now, Jaleh Rezai. She is the co-founder and CEO of Mutiny. Jaleh, thank you so much for joining us. So talk to us about how Mutiny works, because really what you're doing is improving websites, giving businesses the tools to improve their websites more easily and help turn that into dollars, right?
Absolutely. If you think about the evolution of marketing, Emily, phase one was all about the Mad Men era, right? TV, offline advertising. Phase two, with the internet, we moved into the majority of that spend getting shifted to online platforms like Facebook and Google. But the challenge that everyone has, as you mentioned, is that 19 out of every $20 that companies spend on those platforms is essentially being set on fire.
Really?
And
that's pretty dramatic.
Well, the reason is that typically the buyer will see an ad and then will be taken to a website that's generic that they don't understand, and they end up not converting. And so now with the availability of data and AI, we're moving into phase three, where the focus is all about how do we take all this money that we're giving to the Facebooks and Googles of the world and actually turn that into revenue for the company. And that's the problem that Mutiny solves.
How?
So we essentially plug into the customer's data and website, and then we use AI to create thousands of different versions of their website for their different buyers.
And how do you choose the right one of those thousands?
Well, there's a lot of technology that goes into it. And one of the things that's made Mutiny very successful is that it was inspired by my own experience. Prior to Mutiny, I led marketing at Gusto, and we had this same waste problem. And we decided to build a big engineering team to solve this. And that's in fact what all of the biggest tech companies, the Ubers and the Airbnbs of the world, are doing, hiring hundreds of engineers and data scientists to basically solve this problem. And so after doing it ourselves, we realized that every company needs this, but that in order for them to do this, it's virtually impossible to hire all those engineers. So we built Mutiny, which is essentially your own growth engineering team in a box that companies can deploy to drive all of these savings and conversions.
So are you saying if I go to a website like J.Crew, which I've gone to many times, but still doesn't seem to know that much about me, it would be more personalized for me thanks to your technology?
Absolutely. If they were using Mutiny, they would be able to show you content that was much more personalized to you specifically.
So talk to us about your customers. Who are they? How many? What's the vision?
Absolutely. So 50 million people have seen a website personalized by Mutiny. We're behind some of the fastest growing companies in the world, such as Snowflake, Notion, Dropbox. And to give you an example, Notion in just 3 months was able to increase their conversions, which means reduce their cost of advertising by 60%. And so we're seeing some incredible results and market momentum.
So, it's a really interesting time to be talking about this because, we've been talking about big tech earnings results, advertising-driven companies. So, for example, Snap just reported, and the results were not that great. Is that because companies are moving their ad dollars away from Snap and Facebook and Google and into, other ways to make money? Or is that because advertisers aren't spending money right now?
I think historically companies have not had many levers outside of spending money on advertising in order to grow their revenue. So we're definitely big proponents that companies need to start shifting some of that spend towards, technologically enabling their own properties and their own websites so that when they get the handoff and those visitors end up coming to their website interested to buy their product, they're able to give them a really great experience and actually convert them into revenue.
So you just raised another round, $50 million, led by Tiger Global. Talk to us about what you'll do with the money and what's next.
Absolutely. You know, we started with the website. Our vision is to expand and be able to personalize all of the different customer touch points. And we're excited to use this funding to grow our team and expand our product. And, you know, I believe that every company in the world can use our technology. So we're excited to go on that expansion journey.
All right. Jaleh Rezai, co-founder and CEO of Mutiny. Thank you so much.
Thank you
for joining us. We'll continue to follow your story. All right, coming up on this Earth Day, we're going to speak to a CEO that's making crypto more sustainable. That is next. This is Bloomberg. It is time now for our crypto report, and I want to take a look at where things stand to end the week. We are joined by our crypto contributor, Sonali Basak. Sonali, it's been a crazy week in equities. How's it been in crypto?
Yeah, that risk sentiment really sold off when it came to cryptocurrencies as well. And you look at Bitcoin, it was down about 2% over the last 24 hours, and that's brought it down to 39,640 or so. It's coming off its lows a little bit here, but it really hasn't gone anywhere in more than a week. It's come kind of full circle here, even when it caught a bid for a while. Emily, when you look on the year, you do have pressure on Bitcoin prices, and they're generally down on the year. They have not yet recovered to the highs of last year, let alone the highs of this year. But, you know, the question here becomes what kind of innovation happens when Bitcoin is under pressure? What happens to other layer ones? What happens to layer 2 protocols? Right now, the industry is in investment mode, but at what point does venture capital and other forms of fund flows impacting what's happening when it comes to creating new assets?
All right, Sonali, thank you for that update. Stay with us. I want to bring in our next guest, Stacey Warden. She's the CEO of the ALGORAND Foundation, which is a blockchain that works to have minimal impact on the environment. Stacey, thanks so much for joining us. How exactly do you do that?
Well, you know, it gets pretty technical pretty quickly, but we were founded by Silvio Macaulay, who's a Turing Award winner in computer science. He's a tenured professor at MIT, 25 years, and he invented a couple of things that were they're fundamental to cryptocurrency overall. So zero knowledge proofs, verified random functions. These are his, you know, pillars that came from his inventions. And so he watched the space and he saw sort of the earlier layer 1 protocols that were costly. They were had a very large environmental footprint. They are slow. And so he said to himself, you know, I could probably build something better than that. And the thing in crypto is it's all about the consensus mechanism. Everything comes down to the quality of the consensus mechanism. And he came up with a very elegant consensus mechanism called a pure proof of stake consensus mechanism. And this enables Algorand to be at the same time very decentralized, highly secure, and highly scalable. And the thing that's kind of interesting about that is that was a challenge that Vitalik Buterin set out a number of years ago. He said it's impossible. If you want scalability, you've got to give up decentralization, or you've got to give up security. You can't have all three at the same time. And Algorand, you know, famously has broken through that trilemma. So you get all three with a very low carbon footprint.
Question here, for the people who believe so heavily in Bitcoin that don't want to move to a proof of stake concept here, what are the frictions in converting some of those believers?
Well, you know, Bitcoin is a digital store of value. So it's a digital gold, but it can't do things that other layer 1 protocols can do that are enabled by smart contracts, right? So it's a kind of, it's a different game actually. And so all of the supply chain management that you can do, the various things that come from the ability to have money that's programmable, you can't really do on the Bitcoin blockchain. So for that, you need to look at other kinds of layer 1s. And Algorand is built to compete with traditional finance because it's fast enough and it has 4.5 second settlement finality. So it's really trying to go up against the big boys of traditional finance and can compete quite well in that realm.
You mentioned Vitalik Buterin, the co-founder of Ethereum. He's been on the show, so we've certainly heard his arguments. It's the second largest cryptocurrency. It's gearing up for this big transition to proof of stake from proof of work, which of course is often framed as the environmental villain here. What are you looking for with the Ethereum merge, and what are your expectations for what comes after it?
Well, look, we've been waiting for that upgrade for a while. I have no particular insight into their product timeline at all, but I do know that by its nature, a proof of work protocol is not going to be environmentally friendly, because the way that those nodes agree, they're running kind of an arms race of energy consumption in order to be first, to win the race to append the next block. And so proof of stake protocols are more environmentally friendly. The problem is that traditional proof of stake protocols tend to go to sort of, the winner takes all mentality. And, by the way, when the node with the highest stake gets to append the next block, well, then all of the bad actors know where to attack. So they tend to be a little bit less secure. So ALGORAND uses a pure proof of stake protocol, which leverages a fair amount of uncertainty by these verified random functions that give you this sense of security because you don't know where to attack, and a very light carbon footprint.
Stacey, I'm wondering if you can parse through the noise here a little bit, because so many Bitcoin miners out there are trying to be greener, but when you're still operating on a proof of work concept here, can you really be that green? I mean, how much progress can these miners actually make here when it comes to the overall carbon footprint of Bitcoin?
Well, I think they're up against a pretty seriously steep hill, but they can do a couple of things. First of all, the energy that powers the miners can be renewable energy. Of course, that's the most obvious. And then, Bitcoin advocates will point out, and they're right, that they don't get energy subsidies for any of the energy that they use. So they use a fair market price for that energy, unlike many other industries. And they'll also say, look, we are portable, and we will go to wherever the lowest cost energy source is. You don't move to Tennessee because your electric bill is going to be cheaper there, but a Bitcoin mining rig will move where there is, renewable power and cheaper sources of power. So that's the kind of things that they would say to stick up for themselves. But look, they get it. I would say more and more. They know that they need to become greener. It's just that it's very hard to do on a proof of work protocol. It's like it's baked into the mechanism of the protocol that makes it hard to do.
Now, Congress is starting to look more closely at the climate impacts of crypto. What are you expecting in terms of regulation?
I don't think they're going to, I don't know. First of all, it's important to say that, but I don't think they're going to look deeply at the carbon footprint from a regulatory point of view. I mean, this may happen, but they are very concerned about investor protection and anti-money laundering and that kind of thing. And so that's where regulation tends to stake its claim, I would say. But look, I mean, not just for Congress, but for American people and for businesses that know that they need to be green and they have ESG goals that they have to meet. They are not going to tolerate putting large-scale businesses on a blockchain that uses a lot of energy consumption. I mean, you saw what happened with World Wildlife Fund when they tried to issue NFTs on Polygon. Polygon is a proof of stake blockchain, but it's built on Ethereum, and Ethereum is a proof of work blockchain. And so, the British conservatives, environmental conservation people were up in arms about this. So World Wildlife Fund had to take back the NFTs. The guys that bought the NFTs were mad. I mean, the whole thing was just a mess. And it's because, the World Wildlife Fund didn't choose a carbon negative layer 1 blockchain, which, ALGORAND is. They should have chosen us.
Really quickly here, I'm wondering if you look over the next 6 months, what are the most promising applications that are going to be built upon ALGORAND that'll help push it forward?
Oh, I thought I only had about 7 or 10 minutes for this segment. So, no, the thing about ALGORAND is it can handle scale. So right now we're doing 1,000 transactions per second. We can do 10,000 transactions per second by July, and it has immediate finality. So in 4.5 seconds, it's settled, it's final settlement. So you don't have to worry about forking, and you don't have to worry about that uncertainty. So that, of course, lends itself to a number of different applications. First of all, and I think most fundamentally for us, and it's kind of our North Star, is financial inclusion. So we've got, 1.7 billion people in this world that don't have access to finance. And so ALGORAND can scale, and it can scale with a light carbon footprint to make sure that that can happen for those 1.7 billion people. And of course, there's tons of supply chain kind of plays and we have a lot of environmental and climate-focused applications built on ALGORAND because they need to be. So Planet Watch is a very good example, where they put sensors in the air to see air quality. And of course, you need that kind of thing on a blockchain because you don't want cheating with the data.
Stacey Warden, we're going to have you back when we have many more hours to discuss all of these very complex issues, but I appreciate you digesting it down to a few minutes here. Stacey Warden, CEO of ALGORAND Foundation, and our very own Shonali Bostic. Thank you both. Coming up, Elon Musk looks one step closer to a Twitter takeover. We're going to find out whether he is set to try to seal the deal. That is next. This is Bloomberg.
It feels hard to believe that the iPhone 14 launch is only about 6 months away. That means it's time to start discussing what we can expect from the next generation versions. As we all know, the iPhone 13 was a fairly muted update, focusing on camera enhancements, a minor speed increase, and a higher frame rate ProMotion display on the Pro versions. This year's new iPhone upgrade, however, will be a bit more significant. In terms of design, it will follow Apple's recent pattern and reuse the same general look for the third year in a row, but of course add some key enhancements. You can expect a larger camera bump, updated colors, and on the Pro models, a pill-shaped cutout for Face ID and a hole punch-size cutout for the camera to replace the notch. The larger notch cutout, however, will still exist on the regular versions. The other key change this year will be screen sizes. Apple will now offer both the Pro and regular models, each in the same 6.1-inch and 6.7-inch screen sizes for the first time. It will also stop making the 5.4-inch iPhone mini size. You should also expect the iPhone 14 Pro to get a new A16 chip, while the cheaper models will likely keep the A15 processor around for another year. The iPhone 14 Pro versions will also get a new 48-megapixel camera for its wide-angle lens to take far better pictures, but the regular 14s will likely stick to 12-megapixel sensors. Lastly, another feature Apple has been working on is the ability for the new iPhones to send emergency texts and report SOS situations over satellites. That would help Apple compete with Garmin and give it yet another cool, potentially life-saving feature. I'm Mark Gurman. This is Power On.
You can subscribe to Mark's Power On newsletter at Bloomberg.com. All right, let's get back to Twitter and the very latest. But first, let's remember what Elon Musk said about potentially buying Twitter at his TED Talk last week.
Civilizational risk is decreased if Twitter, the more we can increase the trust of Twitter as a public platform. And so I do think this will be somewhat painful, and I'm not sure that I will actually be able to acquire it.
So where are we now? Let's bring in our Ed Ludlow. Where are we? There's been some development.
There's been some development. It seems like Musk is taking this seriously, right? That this could be a real deal. So according to Bloomberg sources, he has been vetting potential equity partners. He has $25.5 billion of debt backing from really big name banks, but he needs to come up with $21 billion of equity financing. Could be his own pocket, could be partners, but just fantastic reporting from the deals team that he instructed his advisors Saturday night of Easter Passover weekend. By Wednesday, he had those commitment letters from the banks. According to sources, Elon Musk is going on Zoom meetings, trying to convince bankers about his vision for the Twitter platform, how to boost revenue. And now could be days away from this all getting settled.
Days, but doesn't the Twitter board have to agree?
They do, and as we know, the Twitter board said on Thursday they'd received Elon Musk's offer, the original one, $54.20 a share. They got to consider it. What's happening next week? Twitter earnings on Thursday. Fast moving.
All right, so much to continue to wait for. Are you going to get any sleep this week, Ed, while we wait?
I'm praying. Yeah.
Ed Ludlow, thank you. Have a great weekend. And to all of you, have a wonderful weekend. It is Friday, our favorite day. That does it for this edition of Bloomberg Technology. Wall Street Week coming up next with my colleague David Weston and a slew of wonderful guests. Don't forget to check it out, as well as our new podcast, wherever you get your podcasts. I'm Emily Chang in San Francisco. This is Bloomberg.